Talking about some more earnings, then you had Arvind SmartSpace report its earnings. Mr. Kamal Singal, the managing director and CEO at Arvind SmartSpaces, joins us on the show. Well, hi, good afternoon. Thanks for making time and speaking with us. Your recent launches, that's what I wanted to begin by asking you. They have done well, and that's reflected in your quarterly bookings as well. But going forward, do you believe this 300 crore run rate is something which is sustainable per quarter?
We have been growing at the rate of 25 to 30% in terms of fresh sales year on year for the last several quarters. This year also we had kind of planned to grow at the similar levels. Last year we did some 800 odd crores of fresh sales, and a 30% growth will take us round to the similar number. Yes, this quarter we did more than 300 crores, 369 crores to be more precise in terms of fresh sales. And broadly, this run rate or little less than that should be something that we should be averaging for the year as a whole, considering that we are targeting to grow at 30 odd percent over the previous years.
Okay, your profitability has also seen a marked improvement. Net profit has almost doubled. What's driving this improvement? And is it fair to assume that you'll have record profits this year?
Yeah, I mean, of course, this is also a result of higher top line, so to say. Otherwise, our targets and our objective has always been to clock an EBITDA of around 25 to 27%, 28% figure, which is the case this year as well and this quarter as well. Our PAT holds around 10 to 12% of the mark, and that remains again the same. We've seen quite a bit of stability in raw material cost for the last couple of quarters. That obviously is helping the cause. Prices have been pretty stable. All the launches have clocked in pretty decent numbers in terms of top line and realizations, etc. So a very stable kind of market, both in terms of cost and selling prices, coupled with higher volumes, is basically resulting in higher top line, as you see in the quarterly numbers, as well as in the numbers for the first half in total.
Kamal, of course, there's this festive cheer which is running across all sectors and markets as well. What are you doing to capitalize on that? Any new launches, any discounts, any new offerings for your customers?
So we are in the middle of a major investment cycle at this point in time. We've launched one project already a few months back, but there is a very heavy pipeline waiting to be launched in the coming 2 quarters of this year. We should be able to launch around 5 projects in this period, totaling around 17 to 1800 crores worth of top line in these 5 projects. In fact, as we speak, we've just about pre-launched one project in Bangalore after this quarter ended, actually in the month of October itself, and 4 more launches are planned in next few months before the year end. So all in all, very exciting time. 5 projects lined up to be launched in next 5 to 6 months, and hence there's a very good visibility and kind of excitement for all of us to bring these very exciting projects and products to the market.
Kamal, also talk to me about your plan about the MMR region. What's the outlook?
Yeah, I mean, as such, these 5 projects that we just talked about belong to the existing geographies of Ahmedabad, Gandhinagar, and Bangalore. As we speak, quite a bit of activity is happening in the market of MMR. As we discussed last, we are hoping that we should be able to sign off at least 1 or 2 projects within this financial year for MMR. When we say MMR, we basically say MMR plus Pune as a market. As you know, Pune, we already have one project which is about to be completed. That gives us a lot of confidence and experience of doing things in that kind of market. We're very hopeful that within this financial year, we should be having 1 or 2 projects in our portfolio belonging to MMR and Pune put together.
Okay, so that's about the MMR region. But going ahead, which region do you think will contribute maximum to your sales in terms of next 3 to 5 years after your entry into the MMR region as well? What would your revenue mix look like?
So in the medium term, 3 to 5 years, we would love to concentrate on our existing markets first, which is Ahmedabad, Gandhinagar being the first one, and Bangalore the second market. As such, Bangalore is as big or even slightly bigger than Ahmedabad for us now. I mean, we know the reason for that, the size it is and the scale it is. Bangalore obviously is doing great for us, and there have been quite a few projects which are lined up for that market. So all in all, Bangalore and Ahmedabad should remain the biggest markets for us. And thereafter, MMR and Pune, as we just discussed, is our third focus area. Beyond that, we'll have a rise on other markets as well, but major focus will remain on these three markets. And within these three markets, possibly the mix that we are targeting is something like a 40, 20%, 40% being Ahmedabad, Gandhinagar, 40% Bangalore, and 20% being MMR. So majorly Ahmedabad and Bangalore. I mean, we believe that there's a lot of scope to go deeper into these markets. We are very small still, maybe 5 to 7 projects going on in each of these markets at any point in time. Is very small. We can easily double it and more than double it. And at the same time, MMR obviously is a huge opportunity, and we'll take little time before we become sizable there. We'll take one step at a time for sure. But having said that, medium term 40, 40, 20 should be our mix from market and segment point of view.
Okay,